Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me today, we have Invesco's QQQ equity ETF strategist Ryan McCormack to discuss where the concentration of performance is coming from the Nasdaq-100 as it breaks 10,000 to yet another all-time high. I mean, Ryan, talk about one of the best performing indexes over the past decade and a half. Looks like it's leading us to kick off 2020 as well.
Yep, you're right, Jill, and it's great to be here as always. On a year-to-date basis, QQQ's up 14.58%. Which is pretty unbelievable considering that the S&P just recently passed for a moment the starting value for the year. So its performance through yesterday up 0.16% on a total return basis. QQQ again is kind of that 14% outperformance, and yeah, it's pretty unbelievable to see over the long term the track record that QQQ has provided.
All right, and Ryan, I think the big narrative in financial markets is the disconnect between the markets and what we're seeing in the economy, and that could be shown in your second chart here with U.S. initial jobless claims. I mean, the fact of the matter is we still have over 40 million Americans unemployed, but the market just hasn't looked back.
So it's interesting, and as we've talked over the past couple of weeks, we've seen the S&P 500 outperform QQQ, and that was no different this week, right? You saw the S&P up 4.15% on the week versus QQQ at 3.22%. And we keep talking about, we're seeing regulations ease, and there's optimism about states opening up in various stages. And I think the initial jobless claims chart is an interesting one, or the table, excuse me. We've seen 9 consecutive weeks of jobless claim declines, which is an unbelievable run. To put it into perspective, though, every single one of these weeks is still higher than the previously all-time high initial jobless claims, which was in October of 1982. But the trend is improving. It's firmly decreasing. As you introduce continuing claims into the fold, on the week ended May 8th, we saw our first reduction in continuing claims in 10 weeks. And then on Friday, June 5th, we had sort of the biggest surprise of them all with the Nonfarm payrolls report, where we saw 2.5 million jobs added for the month of May. Relative to economists' estimates, they were calling for over 7.5 million jobs lost for the month of May. According to Bloomberg, this was the biggest economist miss in the gauge since they've been started taking stats in 1996. So as we look, yes, there's still a lot of uncertainty as it comes to the economy and jobs, but as you take a step back and look at the trends, you're starting to see it improve, and I think that's translating into what's been outperforming as of late.
Let's take a look at your next chart here when we're looking at sector performance, and of course, energy and financials have been making their move back over the past week and a half, which is why we saw some outperformance with the SPY.
Yeah, exactly right. And I think that optimism is carried over exactly. Energy, financials, industrials, all 3 sectors up over 8% on the week. Again, investors are looking for things that were beaten up and can potentially rise from this reopening of the economy.
All right, Ryan, let's wrap up here. I'm going to let you take it home with the next 2 charts. Tell us about the SPY performers and wrap it up with the Qs.
Yeah, so to dive down into the sectors, it's still the same sort of story that we've seen over the past couple of weeks. It's the travel and leisure names that were under significant pressure. Airlines in particular, American Airlines, United, Delta, Alaska, all of them up over 24%. Some of the cruise lines, Norwegian, Carnival, Royal Caribbean, they're seeing a lot of renewed interest, along with the energy names, Occidental, Apache, and Marathon Oil, all performing over 20% for the week. Coming off, what was a lot of pressure over the past few months. As we look at QQQ, similar story in that you have United Airlines in there, you have Marriott, you have Cintas, you have Trip.com, where those are names that were under pressure and were directly affected by some of the coronavirus regulations. There's just not as many names to choose from in QQQ that were directly affected because of the lack of energy exposure, because of the significant underweight to industrials, no financials exposure. Frankly, the names that were beaten up we're more so in the S&P 500 than QQQ. So, I think this narrative has continued for the past couple of weeks, and if we continue to see optimism in the economic data, we could see this trend continue.
All right, Ryan McCormack, QQQ strategist at Invesco. Thanks for joining me on Trade Talks as always.
Thanks very much, Jill.
All right, thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.